Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site, we have Mike Venuto. He's the Chief Investment Officer over at Tesoro Investments. And we're going to take a look at an ETF for the gig economy. Mike, it's great to have you back with us
Great to see you,
in Times
Jill.
Square. Now, let's talk about this, the gig economy. What exactly is that?
So the gig economy really was born out of the 2008 financial crisis, right? So many people were used to having that 9-to-5 job, and it all kind of evaporated. In a lot of ways, the gig economy is similar to cryptocurrency that way, right? People lost faith in a lot of these institutions. So what it is today is it's all the companies that are allowing individuals to control their own cash flow, to build their own careers and not have to work in a corporate environment. It's estimated by next year that 40% of Americans will be somehow working in the gig economy.
All right, now, why did SoFi sponsor this particular ETF? Clearly an innovative company in and of itself.
Yes, absolutely. So SoFi is very much a mission-driven company, right? They're all about engaging with a population that tends to be underinvested, right? So they've helped people with amazing new products in the student loan world, and now they're trying to come to them and say, hey, let us help you engage in investing, right? You tend to be underinvested. So they wanted to start with products that really resonated with their client base, right? And what they saw was many of the people trying to pay off their student loans were engaging in, driving an Uber or a Lyft or selling things on Etsy to help pay off those loans. So it was a great connection, and they saw that their investors also owned many of these stocks. So giving it to them in an actively managed wrapper that's tax efficient and works really well, but it's also diversified. And that was the thesis.
So what are some of the companies that make up the portfolio?
Okay, so this is an actively managed fund, but we do it in very much a rules-based process, right? So the concept was to own the platforms, right? The companies like an Etsy and eBay, Lyft and Uber that are allowing people to do this. But in addition, what we found is gig economy workers really market themselves primarily through social media. So we include things like Pinterest and Twitter, and then next there's the payment companies. So the traditional businesses, they work with MasterCard, they work with Visa. The gig economy workers are getting paid through PayPal and Square and Wirecard and Lending Club. And then there's also the companies that allow you to build what you need for being in the gig economy, something like a Shopify. Right? Shopify, you can go on there and literally build your own e-commerce website in 20 minutes. So it's growing rapidly, the amount of companies coming to this space.
Yeah, I mean, it really is quite incredible how products have become democratized, right? Now everyone can have a car service. Now everyone can have makeup artist services done. Glam, if you're listening, my favorite gig economy makeup application service. Everything's becoming democratized. It's not just a certain income level that can afford these extra luxuries, but let's go back to the ETF management. Why go with active when passive is such a hot topic?
So we do believe that a rules-based approach is important. That's why we have 5 different tiers. The prospectus is very clear. The reason to go with active is some of these companies move a lot. Like a Square, could be up 25% in a day, down 10 the next. An active wrapper allows us to adjust for that. But even more importantly, many of these gig economy companies have either gone public in the last 3 months or are going public later this year, things like an Airbnb or a WeWorks. So the being active allows us to dollar cost average intelligently into these IPOs rather than have an index just go by 5%. And we've seen what some of these IPOs have done right off the bat.
Yes, we have. All right, to wrap up here, while we have you here at MarketSite, what's your outlook for the ETF space? Do you continue to see that growth?
Absolutely, and I'm seeing a new form of growth. So like the relationship we have with SoFi, we're acting as the trust administrator, the portfolio manager. They're really in there as the sponsor and helping the idea get to the world and finance the process. What we're seeing is more and more institutional investors understanding that the ETF is just a fintech wrapper that makes things more accessible for their end clients. And that, we believe, is the next wave of growth. It's now not so much anymore what I like to call field of dreams, right? Like, if I build it, they will come. No, I already have this, and I want to make it better for me and my clients.
All right. Well, thank you so much, Mike. Always great to see you.
Great to see you.
And thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.